Joining us with a closer look on what's playing itself out on that market scene is Muhammed Wagley from Sasfin Wealth. Muhammed, a pleasure. Good afternoon to you.
Good afternoon to yourself, Nalitando. Always a pleasure to be on your show.
Let's chat about the week that was. It does seem like it was one full with company news, but also the JSE just really battled. I think yesterday we saw green screens, but even now it's red, and it's been red most of the week.
Sorry, Nolitano, yes. I didn't get that.
Sorry, I was asking about the week that was and all what the markets had to digest, this past week.
Yes, so, we see a bit of a trend here. One day we're up, and then it seems the next 3 days we're down. So whatever respite we do get, we don't get to sort of live in that. And what we've seen this week is more or less that. Yesterday we're up about 0.7%, as you just mentioned. Pretty much all those gains wiped off. On my screens, I don't really see any green at all. So pretty much gave up all of yesterday's gains, and whatever sort of positive sentiment that we did benefit from, not seeing it at all.
I must ask you also about the month of February. What was in the air? It's supposed to be love, but that's not what we saw in the markets. It just wasn't a great month, and I'm not sure if that has anything to do with markets still trying to get over the fact that the interest rates cutting picture is a little bit less optimistic than we thought.
Yeah, I actually think you hit the nail on the head there. Although for what it's worth, I think there was quite a bit of love on the American and European markets, but we really didn't get any of that here. And I think you hit the nail on the head. It's got to do with those interest rates. Essentially, the news has come out that, we have been pricing in, earlier in the year, it was a March rate cut, then a May rate cut. It's now looking likely that the rate cut will actually come in June, So the higher for longer narrative really continues to pervade, and that's putting a dampener on. I will also say that, perhaps we were coming towards the end of the tax year, and maybe we saw some taking of profit there, or rather incurring losses there as well. So that could have had an impact as well. But I think you hit the nail on the head. The key thing there was those interest rates.
And of course, an interesting one coming out of the US yesterday was that inflation measure, the PCE. We saw a 0.4% increase. Let's just talk about how markets are taking stock of this number.
No, it's quite interesting. I think by and large, that was, in line. Really, the target is 2%. Now, this is really key data because this is the information that the Fed looks at as sort of their measure of inflation. In my mind, this was more or less what was expected. No real sort of dampener here, just given sort of the previous news that we had seen. They are still going to be cautious. Things will be sort of a bit higher for longer, at least the way I see it. As I mentioned earlier, we're probably looking at June. We did see sort of a bit of, I would say, softness on the core PCE data. They rose 2.8%, and that was that 2.8% on a yearly basis, and then that was sort of a 0.3% on monthly. We're looking to bring that down, but this was more or less expected. So I don't think there's been much of a change on outlook, and I think it was stomached a lot better by global markets. But we also didn't sort of react negatively to the news yesterday either, so that was relatively good for the market. But as I mentioned earlier, we've given all of that up already today.
And then, of course, one that is bleak from today, MTN. I think, expecting headline earnings per share to fall 60 to 80%. It looks like those reforms in Nigeria have really battered the telco.
Yeah, this is really a story of the Naira. Operational performance was good, but, over the past year and a bit, the Naira's devalued by, over 200% and that's really what's putting pressure on the bottom line here. So needless to say, the market didn't like that. And because of the lack of certainty around the Naira, the outlook is pretty bleak as well, truth be told, so not really sure sort of when this malaise will end. But in terms of the actual performance, the operating performance, the numbers were really decent there, but they've just seen so much pressure because of the Naira devaluation. They're not declaring a dividend. And it's really a story of uncertainty. That's put a lot of pressure on the share. I see it opened down 4%, recovered somewhat slightly. It's down 2.3%. But yeah, there's a lot of uncertainty here, and it's really hard to tell, when this story is going to turn around. I think MTN in particular has had quite a bad start to the year, and I'm not really seeing sort of a catalyst that's going to turn that around for us in the near term.
What is also interesting, I guess, is the fact that Ghana actually managed okay, and so did South Africa. But it's just not enough. And I'm wondering, the numbers that MTN enjoys in Nigeria, Mohammed, these are great numbers. And of course, it's worth it for them to be there. But every once in a while, something happens there and it gets investors jittery about that territory. Might it be wise at some point for Nigeria to look at possibly diversifying slightly out of Nigeria?
Yeah, absolutely. You mentioned it, and this is sort of not new. Every once in a while, something comes out like this, whether it's sort of the regulators there, which was sort of the one that I remember previously, and today sort of the news that came out was in relation to the exchange rate. So really there's a lot of risk. Perhaps it's not sort of imprudent to be diversifying some of that risk away, but one has to consider this is perhaps the biggest chunk of the business. So it is, I guess the company does find themselves in a bit of a difficult spot, because a lot of this risk is stuff that they cannot control. So yeah, it's a difficult situation to be in, really.
Speaking about difficult situations, Northern Platinum, but of course, no surprises here. It just hasn't been a good time for our platinum miners.
No, not at all, and we've had quite a few platinum results coming out, and really the story is very much the same. Profits are slumping massively by double digits, and really it's just in relation to the commodity or the relevant metal prices, and that's really what we're seeing across the board. Saw the same thing pretty much with Impala, but I think one thing I'll say is perhaps there's no sort of new bad news. It's a lot of the same bad news that we're seeing, a lot of the same bad news that we were expecting. And in that regard, it's just really a sort of depressed platinum market, and that's kind of where we are right now. I think Northern in particular had to cut quite a few of their capital projects due to current slump in metal prices. So that is putting quite a bit of pressure on them. I see the shares down about 6% today, but it is sort of in line with what we're seeing across the industry currently.
Yeah, rather bleak one. We don't know what's going to take Mohammed to see that turnaround in PGMs at this point. But I'd like to get your stock pick before then. Let's reflect on counters that have found favor with your industry peers.
So we are choosing Sanlam. I think good earnings momentum, good price momentum. They came out with a trading statement, and given the operating environment, the numbers were very good. Return on financial operations and sort of core profits almost up 25%. So executing incredibly well in this environment. They got a nicely diversified business. They're also sort of streamlining their portfolio in Africa through JVs. And then they have an Indian operation that is also looking like it's performing well and improving. And so they've got exposure to emerging markets, and that's probably the fastest growing emerging market for the next 5 years. So on a 5-year basis, yes, I think it's also looks quite positive.
It's offshore, and it's European engineering giant Siemens, who apart from doing heavy machines, have also got an electronic component, one on the automotive side of things, and one on construction, but in the form of sort of smart buildings. They're in Europe, first of all. European share prices incredibly depressed for obvious reasons if you take a look at their economy, but I still think the prospects for them lowering interest rates at a faster pace in America is pretty good, which will benefit things like Siemens. Secondly, as I said, on the electronic side of things, there was a lot of overstocking on the automotive side, which is probably coming to an end. Someone should be able to get some volume and income growth there. On the other side is their smart infrastructure, which, strangely enough, ties in very well with large language models in the sense of using so-called AI to make that kind of machinery and electronics that they provide for smart infrastructure work better. So that could be a nice change in income vector for them as well.
Stock pick is Visa at the moment. I think trading at a 25 times multiple, growing at 15 to 20% per annum going forward. The metrics are quite nice. You've got to obviously be quite selective about your offshore picks at the moment, but I think Visa is quite a nice safe play and one that I think would be a nice compounder over time.
Well, Mohammed, let's reflect on some of those counters. We have Sanlam, Siemens, as well as Visa.
So let's start with Sanlam. So they actually released results yesterday, if I'm not mistaken. And I think the analysts you got there sort of really hit the nail on the head. Within sort of a challenging environment, we all know this, they actually performed really well. I do quite like sort of the growth that they're seeing in the emerging markets. The Indian division did really well. And I think, Indian GDP numbers came out a couple of days ago and they were like quite high, close to double digits, and I think this is quite a boon for them. I imagine that's going to continue to be sort of a high growth sort of segment within their business. But I think the analysts there did touch on a good point. This isn't necessarily just the short term play. I think long term, there's some encouraging things happening there. So I quite like the Sanlam pick. And then moving on to Siemens. Siemens quite interesting. They've actually turned it around quite well. They had sort of unbundled a few different parts of their businesses, the healthcare side and the energy side, if I'm not mistaken. And they've really turned it around here, sort of in the industrial, I guess, semiconductor type space. But another thing that I'll note, in addition to all of the reasons the analysts mentioned, is they've still got quite a bit of a big stock holding in Siemens Healthineers, and I think that's also helped them quite a bit. And again, last point, the European shares are relatively depressed. I do think this is a good pick, really. I quite like it myself as well. And then the last one was the one I liked best, and that was Visa. Didn't need to take any notes from that. This, truth be told, when it comes to a company like this, I tend not to focus too much on the valuations. It's just the story is so robust. At the end of the day, when we swipe on those cards, Visa does, get sort of some sort of payment in return for that. And also this trend towards cashless, moving away from cash, is only going to get stronger. That's just the reality of it. And guys like Visa and MasterCard are primed to benefit from that. They really already are, but they're going to benefit more in the future. Visa's one way, if you don't have, you've got to have some exposure there. So very much agree with that. I got to say, I actually quite like all three stock picks this week.
Well, with that said, which stock are you loving today?
Okay, I think I'm going to go a little bit safer today. I think within the context of this higher for longer narrative, perhaps it does make a little bit more sense just to be, I suppose, a bit prudent, go for, those quality, bigger type players. This week, I thought maybe it prudent to look at something within the AI space, but also a little bit more diversified. And that is the biggest company in the world when measured by market cap, that is Microsoft. So they're very well diversified within that AI space. But another thing that I like, and I think people maybe don't touch on this enough, just in terms of revenue generated in the cybersecurity industry, they are actually the biggest. They're not a pure play cybersecurity company, but they receive revenues of around $20 billion, just from that space. So I think it makes a lot of sense just to have, a bit of exposure there as well. And especially given the growth of the digital market with trillions of dollars, being spent on protecting consumers from cyber threats, I really like this part of the business, So I think it does make sense to have a bit of exposure there. Just a quick note, I've got to disclaim that this is one of those that's always going to be expensive. It is, the biggest company in the world. And I understand maybe hesitance at entering at these levels, but, long term, they're still super robust. And my expectation is still for quite a bit of growth. So Microsoft.
Fantastic, Muhammad. A great way to wrap up the week. Thank you for your time today. Have a fantastic weekend. That was your Midday Markets Update with Muhammed Wagley from Sasfin Wealth.